I'm about to let you in on a secret Bitcoin super halving that, to my surprise, nobody is talking about. And no, this doesn't have anything to do with the traditional halving, which we're going to talk about in this video. This is something completely different. The truth is that for any market, no matter what asset class it is, what market it is, doesn't matter. For any market to see all-time highs, two things have to happen simultaneously. The first thing is there has to be an increase in demand, aka a new pool of buyers entering the market for the first time. Why is that? Well, because historic demand isn't going to push prices to new highs. And then there has to be a supply that can't meet that demand. Like a lot of times I hear people talk about when they start their economics class in college, the first thing that they'll see on the whiteboard is supply and demand. That's what it boils down to. So in this video, I'm going to be talking to you about two major events that's going to affect drying up the supply of Bitcoin, and that's going to cause an increase in demand, aka that new pool of buyers that we were just talking about. And before we get started, I do have to say that this is not financial advice. Please consult with your financial advisor before making any investment decisions. This video is for your education purposes only. So without further ado, let's get into the content. And if you stick around to the end of the video, I'm going to give you my market update as well. It's been a while. I've been doing a lot of business traveling, shooting ads for know-it-alls, preparing for the launch. I went to VCon, so I'm back. And I missed you guys. So without further ado, let's get into it. So if you haven't watched my video on how Bitcoin has value, give that video a watch. I break down exactly what gives Bitcoin value in comparison to gold, in comparison to fiat. But for the sake of this video, I'm not going to go into all that. The most important thing we have to keep in mind is that Bitcoin is the first time that we've ever had digital scarcity, right? When it comes to gold and oil, we'll never know how much is in the ground, but we'll always know that there will only ever be 21 million Bitcoin. It's regulated by computer code. And the cool thing about it is no matter how much the demand increases, you can't increase the supply. Like when it comes to gold and oil, if the price does a 5x or a 10x, you're going to be seeing gold miners and, oil refineries popping up left and right so they can dig up the gold and the oil, sell it, make more money, and that's going to keep the price down. You can't do that with Bitcoin. So that's one thing. And that's the reason why it was the best performing asset of the last decade. Bitcoin's code also contains something that makes it deflationary, and that is the halving that we all know about. Every 210,000 blocks, the reward that you get for correctly guessing the algorithmic puzzle that it takes to mine Bitcoin gets cut in half. So I have some data here I'm going to read off my screen. In 2012, the halving reduced the amount of Bitcoin produced every day from 7,200 to 3,600. The second one in 2016 dropped the Bitcoin from 3,600 to 1,800. And the most recent halving in 2020 cut it from 1,800 down to 900. There's still 29 more halvings before Bitcoin can't be mined anymore, and the final halving won't happen until 2140. Each time Bitcoin's had a halving, it's triggered a massive bull run. Not just in Bitcoin, but in altcoins too, because people make money in Bitcoin. Then they find out that they're a genius and they want to take more risk with altcoins. And then, eventually we see meme coins pumping, even though meme coins have been pumping while Bitcoin hasn't been moving. But that's a story for another day. The 2020 halving set off a 10x gain. The 2016 halving set off a 50x gain. And the 2012 halving set off a 100x gain. Now imagine what can happen to Bitcoin's price if we had 29 halvings at once, because these two events that I'm about to tell you about, I believe it's like a 99% chance that it can render all of these other halvings obsolete, and you'll see why. All right, so let's start on the supply side. What can cause drastic supply cuts? Bitcoin's code right now issues 900 new Bitcoins per day, which goes directly to the miners. And at current prices, that's a chance to earn between 40 to 50 million dollars per day in Bitcoin. It's not too bad for a hard day's work. And that's across all miners, by the way, not just one. Now, think about this. Historically, when Bitcoin miners mine, they're not always able to hold on to their Bitcoin. Like mining Bitcoin is kind of like mining gold. You don't mine gold and hold the gold and wait for the price to go up and then sell it. You mine the gold and then you're selling it so you can cover the cost of running your mine because it's expensive. You got employees to pay, all these overhead costs. It's the same thing with Bitcoin. On top of that, since Bitcoin's inception, it's been plagued with negative connotations. You had Silk Road, people claim this for drugs, money laundering, the whole nine. So if you're a miner, it's really, really hard to raise capital from a traditional bank until now. Over the past few years, we saw a big shift in adoption adoption and acceptance in crypto led by Bitcoin. And today we have just about every bank and large major financial institution getting involved with Bitcoin. Fidelity, BlackRock, JP Morgan, Goldman Sachs, Morgan Stanley, the list goes on and on. So that means that these miners are going to be able to start raising money, and that's equity or debt, to the traditional capital markets. Take Cypher mining, for example. They've been mining Bitcoin for years, and they've always had to sell their Bitcoin to cover the cost of running their mine. But guess what? Fidelity and Morgan Stanley a few years ago put $425 million into the project. And to be honest, I think this isn't the only one as you're about to see. I think this is a big reason why we haven't seen miners capitulate yet, because the process has already started. So it's like, now that Cypher is sitting on $425 million in cash, do you think they'll ever have to sell Bitcoin again, or at least in the near future? Probably not. Another Bitcoin mining that you probably know about, Marathon Digital. They recently received a $100 million line of credit from a Wall Street backed bank using Bitcoin as collateral. So it's like, now they can buy all the new miners they need without having to touch their Bitcoin stock. Is another example. And it's like 3 years ago, Marathon couldn't even get 1 million or $500,000 for mining Bitcoin, yet alone 100 million. And it's like, as I'm seeing this, I'm realizing that we're entering into a new phase. Like, these miners are going to be able to start raising money from traditional banks and financial institutions, and they're just going to hoard all the Bitcoin that they have. They're not going to have to sell it. To be honest, if they do sell it, investors are going to sell their stock. Like, look at MicroStrategies as a company. Like, there is no Bitcoin ETF around, in the US at least. So people buy MicroStrategies to get Bitcoin exposure. What do you think will happen if MicroStrategies is like, actually, we don't believe in Bitcoin, and they start selling off? People are going to start selling off their stock, because most of the people that have bought MicroStrategy stock in recent history are buying it to get exposure to Bitcoin, because there is no ETF, and they don't want to have to deal with the security responsibilities in storing the Bitcoin and keeping it safe. They rather just buy a company stock that has Bitcoin exposure that's already handling all that stuff. So I got some more data here that I'm going to read off. So right now, currently, miners are transferring around 134 Bitcoins per day, meaning the average miner is selling only 14.9% of his daily Bitcoin profit. In other words, over 85% of what Bitcoin miners earn is being kept off of exchanges for anyone to buy, and retail investors, institutional, anyone. So it's like, soon there won't be any more new Bitcoin for the public to be able to buy. Okay, so that's the supply side. We just talked about what's going to drive the supply. Now let's talk about the demand side. So right now, you already have Square and PayPal buying up 100% literally of all of the new Bitcoin coming into the market. But guess what? We're about to see some unprecedented demand from an industry that no one is talking about. What is that industry? Credit cards. Many credit card companies have already started offering Bitcoin rewards, and for the past few years, like, I have my Fold card, and the link's in the description. So with Visa, you can get up to 2% in Bitcoin rewards on every purchase you make. And with MasterCard, you can get up to 3%. And this is something that I don't think anyone is taking into account with their Bitcoin model. Like the stock to flow, all the popular models that we hear about, I haven't seen anyone take this into account, at least not yet. Think about it like this. If you can get paid in an asset that for the past 10 years has had an annualized return of at least 230%, would you take it? Would you take dollars over Bitcoin rewards? How about flight miles or diner points or any other kind of incentives that these credit cards offer you over Bitcoin, given the performance? I know I wouldn't, and I know I haven't been. I'm gonna read off some more data here. The average person earns $548 a year from typical credit card rewards. If a Bitcoin rewards credit card had been around just 10 years ago, the average credit card user would be sitting on $11 million in Bitcoin rewards today. That's insane. Bitcoin can do 100x from current prices. It'll take 3 to 5 years, but if that happened, people switching their rewards from dollars or flight miles and all this other useless stuff to Bitcoin can end up with around $584,000 in Bitcoin in just as little as 8 years off of the money that they're already spending on their card. Free money. So let me ask you again, if you had the chance to get paid an asset that has been the best asset performing for the past 10 years over anything else, would you take it? Like, eventually people are going to start waking up to this, and I say this because these card companies are going to have to buy up a bunch of Bitcoin to continue to give away. They're not just like, all right, they buy it in a card and they buy it on the exchanges. Like, no, they already have it stored somewhere in their vaults or wherever they're storing it at. That's what I'm talking about, demand here. Read off some more data to you. So people are, as I just said, people are already going crazy for Bitcoin rewards. I've had my Fold card for, I think, at least 3 years now. I've gotten thousands of dollars off of just buying stuff that I would normally buy. The average card is used for around $5,000 in spending per year, just an average. But Bitcoin rewards cards are averaging $30,000 per year in spending. People are using these cards 6 times more than traditional cards because they're eager to reap the rewards. So it's like, we've never seen this kind of transactional demand for Bitcoin. Another data point here. Per year, credit cards process $35 trillion in transactions globally. That's a huge pile of money, and a chunk of that is coming towards Bitcoin. Now, to go over some more data, how many Bitcoins per day is this going to take away, or could this take away? Let's just be super conservative and say just 1% of credit card transactions involve a 2% Bitcoin reward. How many Bitcoin per day can this take away? Well, based on these estimates, you're looking at a demand for at least 276 Bitcoin per day. There isn't enough Bitcoin to go around. Like, that can't happen. That means if the credit card companies keep this up and demand continues to rise, the supply can be eaten up in as little as 2 months. Now, that's not going to happen, most likely, 99% sure. And I think that when Bitcoin does do like its 100x or 200x, wherever it goes, we'll be able to trace that back to these 2 events that I just talked to you about. And if I had to say when this would go into effect, we're probably looking at around 2025, the latest, maybe 2024, late 2024. Obviously, the economy's in a funk and we still have to like fix a bunch of stuff, but this is just good to keep on your radar if you're in this space and if you're considering buying Bitcoin, which, I think everyone should have just a little bit, obviously not financial advice. So now you know why I'm calling it a super halving, because it can literally render all other halvings obsolete, as you can see. So now that I told you about that, let me just give you my quick market update and let you know how I'm viewing things, as it's been a minute since I gave you guys one. I still think we're in the midst of a major bear market rally. So this is the S&P 500. We're looking at the monthly chart, and I think we're gonna obviously come down, come up, and still come back down into this blue box. So yeah, I just keep trying to tell everyone, like, don't be fooled by this. I do think this is a bear market rally. Look at the Dow. Same thing. I think we're in a bear market rally. Same thing with the NASDAQ. Like, all these charts look the same. Now, Apple, this was, I'm not gonna lie, I was a little surprised by this. Apple's at all-time highs again. Like, obviously they're doing their stock buyback. They just released these new AR headsets, and I think that's why they've been, had this major pump. But I still think Apple has to come down. Same with Amazon. I'm not even gonna go through all of the FANG stocks. Let's look at some Bitcoin. I made a video that I was double downing on my shorts at 30K. Hey, I am in the green. I took out like 10% of the shorts because I'm just going to take profits as we get down here, and I'm probably going to leave in like 10 to 20% when we get to 20K, because I do still believe that there is a chance that we go to a 13K Bitcoin. Like I said, even if you look at this one, we had this back in 2017, we saw the market drop, consolidate. It dropped, came back to the top of the channel, went to the bottom of the channel, and then dropped before it came back up in the channel. And I think we'll see that same thing here. Go down to the channel, come down below before we come back in and start consolidating and make our way up late this year, early next year, depending on how elections go. So I am still short the market. Same thing with ETH, still short in my ETH. Right now we're at 1755. We haven't been there in a while. I still think we'll see at least ETH go back down to 1312. But to be honest, I wouldn't be surprised if we saw ETH below $1,000 again, which would be a great buying opportunity. It might be our last time seeing it that low. Looking at the total crypto market, same thing here, consolidating within this channel. I think we'll hit the bottom of this channel again, maybe even go a little lower. Only time will tell. And then especially when you factor in how the SEC has been cracking down on Binance and Coinbase lately. Crypto market's at war right now with TradFi. So this isn't an exciting time for crypto price-wise. A lot of things happening. So those are my views. That's pretty much it. Hope you got value from this video. Let me know in the comments if you were thinking the same thing, if this makes sense. Let me know if you've heard anyone else talking about this. Let me know if there's any other details that I may have left out. I'm always open to constructive criticism and feedback. But with that, I'd like to conclude this video. I thank you guys for tuning in. You're going to be hearing a lot more from me. As I said, I've just been grinding lately. Know Owls will be launching in mid to late July, so be on the lookout for that. So I love you. I thank you so much for tuning in. I will see you in the next video. Take care.